Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Tuesday, and it's July 26th. As we noted yesterday, there's no data, but today will be the complete opposite. We got a lot of data to go over, so we'll jump right into it. We'll start with the Case-Shiller home prices for the month of May. This kind of gives us the gauge of the 20 largest markets out there. So back in April, as you can see, we had a 5.4% year-over-year increase. In the month of May, it still went up at 5.2, so it's within the same range, but slightly lower than April's reading here. Now we also got the market services flash PMI. So you see what we see. I'm sorry, let me rephrase that. Market flash PMI is usually the manufacturing, but in this one, it's on the services industry, which is important primarily because that makes up the largest amount of jobs here in the U.S. And anything above 50 is considered expansion, whereas if you go below 50 is contraction. So as you can see, we were kind of on the cusp here at 51.4 in June, and then went down to 50.9. So right now we're just on the edge for possible contraction in the services industry here. Something we want to definitely keep an eye on here. We also got consumer confidence for the month of July. So in June we had a 98, which is a good reading here, and we're forecast actually supposed to dip a bit more down to about 95.5. But it did dip, but not quite as dramatic as the forecast at 97.3. So a little bit better news than we were forecasting here. And then, however, we did get some really good news here on the new home sales here for the month of June. So in May, we had 551,000 new home sales, and it was supposed to increase the forecast up to 562 for the month in June, and it actually bumped up all the way to 592. So a nice number right there. So big mixed bag of news. Home prices are still going up, but just not at the rate we were seeing before. But services industry looks like it's slowing down, which is a concern. And of course, consumer confidence we'd like to see up, primarily because if people are confident they're buying stuff, and that helps the economy to keep moving along here, especially with this real snail pace movement we've been seeing here. Even though we're doing much better than a lot of our other countries around us, like in Europe and Asia and such. Stock market's down. We had some bad earnings reports that came out, especially with McDonald's, which really disappointed things. And then plus today we begin the two-day meeting for the FOMC, which tomorrow about 11 o'clock Pacific Standard Time, they'll start giving their announcements and of course press usually is about 11:30. So be careful. Tomorrow we'll have a lot of volatility going in there, so market is pulling back a little bit. So what they're going to be looking for is see how hawkish the tone may sound, or if it's going to be again, more of a dovish tone. So they're looking for what kind of tone the Fed's going to be setting. Again, there's no expectation of the rates to be hiked up or anything at all on this meeting. Some people don't think there will be one this year. If there is, maybe in December after the elections. But there's also concern that maybe it could come in as early as September's meeting. So again, we're going to take a look to see what kind of a tone the reading and the announcements show, and investors will go from there. Later today, we got some stuff that could affect tomorrow's news with the Apple, and somebody else is also going to be coming out with some after hours. Twitter, I think it is. Twitter and Apple are coming out with their earnings reports after hours, so that could affect tomorrow morning's. But meanwhile, they're kind of bracing for any news from the Fed, and kind of you're seeing a pullback on both the stock and, as you can see here, bond market here. So we did start up the day up higher, and then we pulled back. So right now we're down about 3 basis points from when we left off yesterday. As you can see, we did touch here. This is going to become a kind of tougher resistance. So right now we're starting to get more of a downward trend here, which was basically will raise interest rates here. So we have to kind of watch this as we have a pretty good drop. We could potentially go down. I mean, the next one support will be here, and then we got the 100-day moving average here. So we got a bit of a drop here that could happen here relatively soon, which would mean, of course, higher rates. All right, folks. So today we're about the same where we left off yesterday. Not much difference. Yesterday, I think we dropped down about 9 basis points in that 3. So it might be, depending on the day when the rates came out, we could be a little bit higher than the initial day earlier on. So if you factor about 12 basis points from the 9 yesterday and then 3 so far this morning, we might be a little bit worse than we were actually at the start of the day yesterday. Okay, sorry about that. I guess maybe I was rambling a little bit. You guys have a great day. Thanks so much for watching. We'll see you guys tomorrow. Bye-bye.